Indeed, the market outlook that OPEC published this week broke with the tradition that we saw for more than a year, at least from the beginning of the year, where OPEC has been the most bullish with respect to demand growth for 2024 compared to various forecasting agencies and financial institutions, with at least 1 million barrels a day difference with agencies such as International Energy Agency. But now, for the first time for a year, they downgraded their forecast for oil demand by 135,000 barrels a day. And of course, this is very small compared to the bigger picture, because they are still expecting a healthy demand growth of 2.1 million barrels a day, which is still ambitious. But we wonder whether this beginning of downward revision in oil demand to make them more aligned with the overall consensus that we currently have with respect to oil demand, whether this kind of downgrade is going to continue in the coming months so that the gap is closed with other institutions, or whether this is going to also affect the decision of OPEC vis-à-vis the relaxation of its output, voluntary output, as of the fourth quarter of this year. So that's the beginning. Is it the beginning of a trend or a one-off? We'll have to wait and see. But definitely, it's a major change from the various forecasts that we saw, at least from the beginning of the year, from OPEC.
Do you think, given the data that you have, the OPEC might have to defer those plans to relax those voluntary cuts starting in the Q4 of this year?
It depends, because the demand revision, the downward revision that they provided, are not substantial. We're talking about just above 100,000 barrels a day, which is very small in the bigger scheme of things. But also we have to think about the supply side, because they do refer in the report to the hurricane season, which we are entering soon. And that could by itself affect supply available. The geopolitical tensions could also affect supply availability. So it's not just that they're not focusing their decision on the demand, which is important, of course, but they're also bracing for maybe a tighter picture towards the end of the year. But that said, they keep on reminding us that their decisions are not cast in stone, and they can always roll back if needed on those decisions, depending on the market signal that they are seeing ahead. But for now, they are sticking to their plan to relax some of their voluntary cuts as of the fourth quarter of this year.